Hi and welcome to the Market Alert for Monday the 14th of February 2022. So a very important announcement actually, because it hasn't been added to the mainstream news, but the Fed, the Board of Governors of the Federal Reserve, are holding a closed board meeting today, 14th of February, and this is to do with interest rates. It's an emergency meeting. It's being held at 11:30 a.m. That's New York time. Or is it Washington time? I think it's Washington, yeah. So watch out for this later on in the trading session. It's likely that interest rates are going to be moved higher today in the US, brought forward from March the 16th. And the reason for this is the amount of inflation raging in the background. Well, the Fed prints its QE money. And yesterday I watched a brilliant interview with the financier Rob Kirby, and he spoke about inflation, and I thought, well, I'll put those numbers into a spreadsheet, and you can see here natural gas has risen by 81% in the last year, crude 66%, agricultural commodities 24%, 44% used car, 37%, 20% cattle, 92% for coffee, 15% lumber, and 37%. And yet the government comes out with 7.5 on last Thursday. So we can see it's complete and utter nonsense when you actually look at the real numbers, and then you put them into a graph like this. You can see that the 7.5% is an absolute joke by the government. So I think they're getting worried now that what they thought was going to be transitory is actually going to be a bit of a permanent fixture for some time. So there is an emergency meeting today to raise rates. So the markets will be in turmoil after this is raised. If they announce this around 4:30, I know there's an announcement at, or Bullard is speaking, but he's not in charge. Powell's would be the one who makes any announcement, and that's at 4 p.m. So we'll have to wait and see. But by that time, it's not going to take them long, is it? They wouldn't be calling the emergency meeting if they didn't know already what they were going to do. So it's just a formality, really. And also, Lagarde is going to be speaking as well at 4:15. Now, as far as I'm aware, she's not going to be increasing interest rates at this meeting. She's just going to be speaking. She again was talking about over the fourth quarter in last week's meeting before she was going to consider raising rates. So I just thought I'd bring this to your attention, that this is happening behind the scenes. But that's thanks to Rob Kirby's interview with Greg Hunter yesterday. When he mentioned it, and I had no idea because it's not anywhere. So catch the market by surprise, or a lot of traders by surprise, so be warned. The headline from Friday, of course, is that crude oil soars, ruble stocks tumble on report that the US believes Putin will launch horrific, bloody invasion. Get the language, the rhetoric there, of Ukraine next week, i.e. this week. So we'll wait and see if that happens. It just seems very odd, doesn't it, that you would actually announce when you're going to actually invade. If you're going to do it, you just get on with it. Very odd indeed. And well, actually, let's just go back to the news. Let's have a look for the week as well, because obviously we've got the emergency meeting. What else have we got from the Fed this week? We've got the UK CPI. That's going to be interesting for this week. But have we got any? We've got a G20 meeting as well. We've got FOMC, Bullard and Mester speaking. But no, so it's G20, and they're bringing out a lot of Fed members this week. Oh, actually, here it is. That's the one we're after, isn't it? FOMC meeting minutes. That's Wednesday, but it's been brought forward to today with the emergency meeting. So yeah, a bit of a news-filled week. So that will help the traders move the market in the direction they want to. And we'll certainly be keeping an eye on the UK inflation. Again, it's all BS, isn't it? 5.4%. It's a joke. But then when you have disposable cameras in the calculation of the basket of items and lip gloss, then it's hardly surprising. It's just smoke and mirrors and sleight of hand that we've seen for many, many years, which I've spoken about in the Market Alert for more than 10 years now. Okay, let's get on and have a look at the markets on Friday. Maybe they caught wind that there was going to be an emergency meeting on Monday, because the Dow fell out of bed on Monday, trading down to 50% of this up move. You can see they're holding there at the moment. as prices are waiting for this news. It could be a fairly quietish morning, or it could be a big sell-off to bring the market back, or the market will rally and then sell off. It just depends. That's down to the futures traders at 7 a.m. when they open in Germany. But at the moment, the Dow is sitting at the 50% retracement. Any upside targets will be in this range should they attempt to move to the upside. We're certainly overbought in this range. We put in just above the double top there, and then the markets have reversed, but we've still got a bit on the downside here, which could happen given the prospect of a rate increase today. We look in the 30-minute chart, which is the other time frame that I look at in the Dow. Market trading up to the DP. We'll start off with, we were overbought, no momentum. We've got the 200 MA, we've got the DP, we've got two supply, we've got a crossover, and then we have the red bar. We can already anticipate this. Market closes below the 5-bar moving average, and then sales to the downside. The down move on Friday to the 21 close, 2100 hours, was 596 points there for this move. Beautiful setup, overbought. Like I say, got your resistance, got your supply coming into the market, crossover in stochastics, and then the parabolic shift and the red, and then down for nearly 600 points. Also showing a bit of weakness at the moment, was holding above the close. I've already sold this market this morning. Stop is at break even already, and 62% retracement so far in the market so far. Just draw this in and just move this across a bit so you can actually see the detail there. And you can see down to 62% there at the moment. So time to move the stop to break even in this time frame, just in case we get a rally back. 47 point potential risk in the 30-minute at the moment, with 1% on the account. So we'll see again. And this was quite simple. It was overbought. We're at a fib retracement level. Just put that in there, 89%. And then we've got a crossover there as well in the stochastics, and the momentum shifting to the downside at the moment. So I'll be watching for support down here, and also these areas as the market, should it make its way down, and certainly as it gets to here, as they picked up a bit of support overnight. But the target, the bigger target, is Friday's low. But we'll see. Depends on the German futures when they open at 7 a.m. So let's have a look at the German market. Again, you can see following suit overnight. You'll see that in just a moment. We're down to 89% retracement at the moment. The market finding a bit of support there. Again, it's very similar to the Dow. If we take out these two physical support areas, then we can expect the market to have a look at this area and here, which will also tie in. If we just grab this and to here, you'll see you've got another 89% down here. Let's just go into a smaller time frame, 30 minutes, and have a look so we can get a better idea of where the pivots are. At the moment, price is moving to the downside, and again, once you get to the low of Friday, is going to be a very important area to try and find support. Again, in between this, you've got those physical support levels where the market bounced on the overnight, and also from here to here and then projected back, there will be an 89% retracement down at this level as well, which is obviously close to the low of Friday. I'll just remove those just to make things a bit easier to see, and just drag the chart over. If we go below Friday's low, then we're heading down to the cluster of support there, plus the S1, and then down to the 15,000 is the S3. Now, that's a very important area, major psychological level for the German DAX. But we've got a bit to go yet. We've got to take out these areas beforehand. So let's move into the 5-minute chart from Friday. It was a nice day, a bit choppy to start with, the market moving to the upside, became overbought. We'd already got some divergence as well. And then again to that DP level, that's the purple mauve colour line, selling inside of the bar here as well. You've got the red inside, and then the crossover, and the market moves lower till it became oversold. We had a bit of a retracement here, but then it was hit by supply once more, and the market continued down to the BRN, where once again the momentum was oversold. We had divergence, we have a BRN, and we have demand coming in as well. You can see them buying into the market. The market then reversed and moved all the way back up to the DP level, but had a few stumbles along the way as the market closed below the 5-bar moving average, but failed to move to the downside. The market then settled through the lunchtime period, as you can see there, in a range. Again, though, becoming oversold, with the market then buying back in and moving prices back to the upside before they became overbought. But the market was waiting for the US, and there you can see prices moving higher to begin with, and then just trading in a range. It seems to be a bit of a pattern at the moment. The best trading times at the moment for the DAX in the 5-minute is half an hour after the market's made its direction, and unless you can catch the first trade. And then of course that bit when the Dow futures traders come on board at let me just work this out, around 11:30 a.m. is another nice trade there, which is where you see this move to the upside. You can see there 9.25, and then they'll bring the market back on the upside as well. But having moved significantly to begin with, the New York traders had a job to pull the DAX up, but they had no trouble with the Dow. So watch out for that sort of 11 o'clock, half 11 time as well for a couple of hours as New York starts to open, and the overnight traders, electronic traders, move in. And again, that's another pattern that seems to be evolving at the moment, that they're bringing the market back to the upside in the pre-market. It allows them to sell the cash market, and then you get the move to the downside after. Okay, let's have a look at the metals before we finish. An interesting day on Friday, because silver started out moving to the downside and then was brought back as gold moved sharply to the upside, but we're stuck at the 62% retracement. I still cannot get over how undervalued this is when you see those inflation figures for every other commodity and the percentage increases, and yet silver is still 60% cheaper than it was in 1979. They will not let it go up for the obvious reasons that I've spoken about before in the alert. But at the moment, it looks like we're going to get a bit of a retracement in this market, with prices down overnight. Although it does seem there's a feeling about this market at the moment where it is actually attempting to move to the upside, which they managed to do on Friday. You can see Friday's session here, the COMEX session with the white there, and they managed to move prices to the upside. What was interesting is that only managed one 30-minute bar to the downside, which again is very interesting, whereas before, you know the pattern, well, they'll move the market down if they can. That was the CPI numbers on Thursday of last week. But, you know, this pattern of moving prices down, they did it in the pre-market there before the London fix. And there again, you'll see the red bars just as the market opens. And there again, you can see that was the shakeout. That pattern of manipulation by the bullion dealers. But at the moment, the market sitting at Friday's close, you know, there could be a sell-off at 1 p.m. in this market, but it seems to have a bit of support, and that's probably due to gold, which moved up sharply on Friday, but now obviously seeing a bit of weakness on the overnight. That was because of the announcement that, again, speculation that Russia were going to invade the Ukraine, but obviously that's gone off the boil a bit, and we're overbought at the moment in the gold market, so there's room for a bit of a pullback, as it were. In the dollar, also moving higher, bit of relief at the moment that there is no invasion. So, and also, of course, what's going to happen later with the increase in rates you're going to see the dollar move sharply to the upside, and the metals being pounded to the downside initially, until the reason that they were increased was because of this with the inflation or hyperinflation in the background. So again, it's the relationship between all of these markets. We could see that, well, obviously the 50% won't be any of a problem for the dollar if the rates are increased. It depends what percentage they increase them as well. That will be interesting. But be braced for that later on today. Crude oil also moving sharply to the upside. Very difficult market to short at the moment because it just keeps moving to the upside. $100 a barrel is on the cards. Spoke about this last week and the effect this is going to have on fuel prices, which is going to have an effect on all of the other prices as well going forward, including food, transportation, etc. So there we go. There's a quick roundup of Friday and where we're heading at the moment this week as well. Okay, that's it for this one. Like I say, brace yourself for later on this afternoon when the Fed will be making some sort of announcement, because they, as it says here, if I can just bring it back, we'll be having that emergency meeting today about rates. Okay, that's it for this one. As ever, thanks for watching. See you in the next.